Are you worried about inflation and the impact it will have on your retirement savings? Well, you're probably not alone. So today in our video, we're going to talk about the effects of inflation and how it erodes your spending power and how it could actually shortchange your retirement without proper planning. And we're going to talk about things you can do to prevent it from happening to you. So let's start off with what are the effects of inflation? Well, let's take a study that was put out by Smart Asset. This is online and published and available. They took a 60-year-old who had $500,000 in retirement savings, and they said, let's diversify the portfolio and assume it's in an investment account that's going to grow at 5% per year. Not unreasonable. And then we said, what are the effects of inflation against that portfolio if they start withdrawing about $2,500 a month for income on top of Social Security to supplement their retirement? Well, if that were the case and we use inflation rates of different amounts, we're going to run out of money at different times. So if inflation was just 2%, that's the blue line on this graph, the portfolio is going to last until this person is about 88 years old. So a 28-year retirement starting at age 60. That is good news because that's longer than the average retirement in America, currently about 24 years. So that is encouraging. And just so we look back, 2% inflation is the goal of the central bank of the United States. However, it's not really the reality. So we have to take a look at what a little bit higher inflation will do to that retirement portfolio. Well, if inflation were to double and run at about 4%, which has been closer to the norm for the last few years, well, now that portfolio runs out before that person turns age 83. So that can get a little scary because now we're right at life expectancy for a lot of folks, or even short of it, and they're going to be nervous about running out of money in retirement. What if inflation was really high? And a lot of people are scared this will come back. We just went through a high cycle for the last 40 years. Now, I'm old enough to remember inflation being extremely high in the late 70s and early 80s when I was still in high school. I remember waiting in lines for ration gas and my dad having to pay interest rates north of 15% from a mortgage on our farm. High inflation is scary because a lot of us have lived through it. Then we had the federal government blast stimulus out because of COVID, and this was Republicans, Democrats alike, doesn't matter the political party, but $5.7 trillion of money was created out of thin air and thrown into the economy, which gave us runaway inflation. Some folks called it Bidenomics. Again, I'm not here to blame the political parties. I'm here to tell you the reality is when there's more money in circulation, that creates inflation. And we had inflation peak a little over 9% just a few years ago. So what if inflation sustained at a high level, like 6% throughout your retirement? Now, I don't think that's going to be your future, but I wanted to let you know the numbers can get a little scary because now that same portfolio of $500,000, well, it runs out by age 80. Now, that should be of concern because now we're assuming that the market gives us a 5% return every year, and this has got inflation down. What if the market goes through a severe bear market on top of this? That could spell disaster. So what we can do about this is understand how do we beat inflation? Well, I'm going to give you two primary ways to do it. Number one, it's understanding how to invest your assets to keep up with inflation. There's good news here. Certain assets do really well in inflationary times. So you want to own assets that will actually track or beat inflation. If you've seen the price of gold lately, you'll know one of the assets I'm talking about. Gold recently hit $4,000 an ounce, once unthinkable for many people because of inflation. It's an inflation savings. As the dollar erodes in value because of inflation and goes down in value, gold goes up in value. Gold is simply a hedge against the currency with which you own it. So as the dollar goes down, the gold is worth more. Hence, gold has been on a rocket ship for the last 12 months or so. Now, you can own other assets. You don't want to bet on one. Diversified assets that will keep up or pace with inflation are very important in a well-diversified portfolio. Real estate is a fantastic inflation hedge. Stocks that are good growth-minded stocks beat inflation consistently over time. And hard commodities like gold, silver, platinum, etc. There are other assets as well, which is why you should work with a competent, independent, fiduciary-based advisor to help you build a truly diversified portfolio that will help you keep up and even beat inflation. Now, the second major way we want to help you fight inflation is understanding those dollars that come to you in retirement. Even if we're keeping up with inflation, we have to worry about taxflation. That's right, legislative risk where the government could change tax rates in the future. We had recent legislation signed into law July 4th, 2025, that made permanent the tax cuts that were put in place back in 2017. So many people said, hey, these tax rates are permanent. Well, nothing in the government is permanent. And if you study historical tax rates like I have, all the way back to 1913 when we instituted income tax, we're about half the average tax rate for middle America over that time period. That's right. Tax rates are more than double this that they are today, effective rate for the average American over the last 112 years. So what's going to happen with the next couple of election cycles? Well, the reality is baby boomers who are now well into retirement or about to step into retirement are no longer the largest voting bloc in America, and they controlled a lot of power at a lot of elections. But millennials are a bigger generation, are now actively voting along with Gen Z, and they are going to be controlling the outcome of future elections. This is just reality. Well, we are in a government that is pushing towards more socialistic programs. This is just the way it is in America right now. I'm not saying I like it. In fact, I don't. I'll stand in and tell you that. But the reality is we are going to have legislators come into the bodies of Congress over the next 2 decades that are most likely going to increase taxation on those that are blessed to have assets and higher incomes. So you need to protect yourself to fight inflation and taxflation. That's the increase in your tax rate, which is highly probable in the next decade or so. What can you do? Number one, Roth conversions may be a sound strategy for about 95% of you watching this video because tax rates at our historical lows today, and you can move dollars at the same tax rates you may pay on a distribution later. Get the tax bill paid now, and all the growth you receive from that day forward could be yours 100% tax-free if you follow all the rules of a Roth IRA. So Roth conversions would be my number one tax-saving strategy. If you are blessed with enough income and you are philanthropic and you are donating or tithing to a church or giving money to your favorite charity, 2025 is a key year to understand that tax giving or gift giving, tax deductible gift giving, this is the best year to do it in a very long time. In fact, for higher income earners, this is the year you're going to want to set up additional strategies such as a donor advised fund or a charitable trust. There are a myriad of tax strategies where you can give like you want to give, but be blessed with some incentives in the tax code to reduce your tax liability. And you compound those with something like a Roth conversion we spoke of earlier, and you actually compound the effect of these tax planning strategies. There are 1,700 plus tax incentives in the tax code today to help you reduce or mitigate your tax liability. But you must take action. I've spoken about 3 or 4 of them here today. We utilize about 165 at our firm for our retirees to help reduce their tax liability going forward. So I hope you understand that inflation is a very serious problem that we're all going to have to deal with about $38 trillion in the federal debt today, and no sign of that slowing down. And again, it doesn't matter politicians on the right or the left, the debt is spiraling out of control. If you just go to usadebtclock.org, you can see where we're at today. And they even have a little button called Time Machine. If you click on it, it will show you where we're going to be in 4 years. And it's quite scary to realize that. And they're going to have to get taxes from those that have assets, and that is you. So be proactive in your planning. Get a tax plan to help you mitigate taxation and fight inflation so you can have a sound retirement. For more smart strategies, like and subscribe to this video and make sure you ring the bell so you'll be notified of new videos on this channel.